We have some absolutely stunning, frankly earth-shattering news coming out of Switzerland this morning. It's a development that could cascade through the global financial system, and most importantly, the physical silver market. What we are hearing is that Switzerland, a cornerstone of global finance and precious metals refining, has effectively frozen a significant portion of its silver supply. This isn't a rumor. This is coming from sources on the ground, and the implications are so massive that it's almost hard to process. We need to talk about what this means, why it's happening now, and what you absolutely must do to protect yourself. Because what just happened at 2 a.m. in the heart of Europe doesn't just change the game, it throws the entire board off the table. This is a red alert, a 5-alarm fire for anyone who owns silver, thinks about owning silver, or simply wants to preserve their wealth in the face of unprecedented global instability. Sources with direct knowledge of vaulting and logistics operations in the Swiss corridor, the Ticino region, home to some of the world's largest refineries like Valcambi, Pamp, and Argor Heraeus, are reporting a sudden and unexpected halt. We're told that major institutional holdings of physical silver have been effectively frozen. This isn't a bank holiday. This isn't a technical glitch. This is a deliberate action. A directive has come down, and large-scale movements of physical silver bullion have been stopped dead in their tracks. We're talking about 1,000-ounce bars, the bedrock of the institutional market, being locked down. Why would they do this? Why Switzerland, the supposed bastion of neutrality and financial stability? We have to connect the dots. Look at the global geopolitical landscape. Tensions are escalating everywhere. The financial system is teetering on a knife's edge, burdened by unpayable sovereign debt and rampant inflation that central banks are lying about. They're telling you inflation is 3%, but you know your grocery bill has gone up 30%. They are actively trying to destroy the value of your currency, and they are getting desperate. In times of extreme crisis, governments do not play by the rules. They resort to capital controls. They resort to confiscation. They resort to nationalization. And what is the ultimate form of real, tangible money that has stood the test of time for 5,000 years? Gold and silver. This action in Switzerland looks like a classic preemptive strike. They're securing the physical metal before the panic begins. Think about it. Switzerland refines an estimated 70% of the world's gold and a massive portion of its silver. It's the physical hub through which the entire precious metals world flows. By freezing the silver supply, they are effectively cutting off a major artery to the global market. They are signaling that the physical metal is too valuable to be allowed to leave. They know a financial storm is coming, a currency crisis is imminent, and they are hoarding the lifeboats. This isn't about the paper price of silver on the COMEX, which is a fraudulent, manipulated casino. This is about the scramble for real physical metal that you can hold in your hand. What we are witnessing is the great decoupling. The paper market, with its endless derivatives and rehypothecated claims, is about to be exposed for the sham that it is. For years, we've warned that there are hundreds of paper claims for every 1 ounce of physical silver that actually exists. The moment that confidence is lost, the moment a major player demands physical delivery and can't get it, the entire house of cards collapses. This move by Switzerland could very well be the catalyst. They are essentially telling the world, the silver we have is ours, your paper contracts are your problem. This is a sovereign nation acting in its own self-interest, preparing for a world where paper assets become worthless and hard assets are king. The timing of this, at 2 a.m. local time, is also incredibly significant. These are the kinds of moves that are made under the cover of darkness, to prevent an immediate market reaction, and to catch everyone off guard. They didn't want to run on the vaults. They didn't want to panic in the markets during trading hours. They executed this move quietly and decisively, a classic tactic of a government preparing for a major shock. They know that once this news becomes widely understood, the demand for physical silver will explode. Every investor, every institution, every central bank will suddenly realize that the game of musical chairs is ending, and there aren't enough physical chairs to go around. This freeze directly impacts the supply chain. The refiners in Switzerland are the primary source for mints and dealers around the world. If they can't get their raw material, the 1,000-ounce bars, then they can't produce the coins and smaller bars that retail investors buy. The supply of American Silver Eagles, Canadian Maple Leafs, and private mint rounds could dry up almost overnight. We've seen supply crunches before, in 2008 and 2020, where premiums skyrocketed and dealers ran out of stock for weeks on end. What is happening now is potentially an order of magnitude more severe. This isn't a temporary disruption caused by high demand. This is a foundational break in the supply chain at the very source. The official story, if one ever comes out, will be disguised. They will likely call it a regulatory review, an audit, or perhaps cite some obscure anti-money laundering protocol. Do not be fooled. This is a smokescreen. When governments want to seize control of an asset, they always invent a plausible-sounding justification. It's the same playbook used time and time again throughout history. They are not doing this to protect you. They are doing this to protect themselves from the consequences of their own disastrous monetary policies. They have printed trillions of dollars, debased the currency, and now they are preparing to lock down the only real money that can't be printed into oblivion. For anyone who has been paying attention, this is the moment we have been warning about. The divergence between the physical reality and the paper fantasy is about to snap. The price you see on your screen for silver will become meaningless. The only price that will matter is the price you have to pay to get your hands on actual physical metal, if you can even find any. This Swiss freeze is a clear signal that the elites, the insiders, and the governments are making their move. They are trying to corner the physical market before the general public wakes up to the fact that their savings, their pensions, and their 401ks are all denominated in a currency that is headed for collapse. So what does this mean for you right now? It means the window of opportunity to acquire physical silver at anything resembling a reasonable price is closing, and it is closing fast. This is not the time to be complacent. This is not the time to wait and see what happens. This is the time for decisive action. If you have been on the fence about buying silver, the fence is on fire. Every ounce of physical silver you can acquire outside of the formal banking and institutional system is a vote for your own financial sovereignty. It is an insurance policy against systemic collapse, currency debasement, and government overreach. The mainstream media will likely ignore this story or downplay its significance. They are part of the system that is designed to keep you docile and invested in their paper products. They will not tell you that a major financial hub just took a critical strategic asset offline. They will not tell you that the scramble for physical metal has begun in earnest behind the scenes. It is up to you to see through the noise and understand the gravity of this situation. This is a tectonic shift in the global financial order. The move away from the dollar and paper assets is accelerating. Intangible assets like gold and silver are being revalued not in terms of dollars, but in terms of their intrinsic worth and their ability to preserve wealth through a crisis. We are entering a period of unprecedented volatility and uncertainty. The actions taken in Switzerland are a desperate measure by a system that knows it is losing control. They are trying to manage a collapse that is now inevitable. The only way to protect yourself and your family is to opt out of their rigged game. You do that by converting your rapidly depreciating paper currency into real, tangible assets. This is not financial advice. This is an urgent warning based on a critical development that has just unfolded. The physical silver market was already stretched to its breaking point. This freeze in Switzerland may be the final straw. Prepare for shortages, prepare for soaring premiums, and prepare for a world where the true value of real money is finally revealed. The time to act was yesterday. The next best time is now. Do not wait until the panic is on the front pages of every newspaper and the dealers are completely sold out. Do not wait until the government imposes even stricter capital controls. The warning shot has just been fired from the heart of the European financial system. This news from Switzerland changes everything. Get prepared, stay vigilant, and understand that owning physical silver is no longer just a smart investment. It may be the only thing that stands between you and financial ruin. We will continue to follow this story as it develops, but do not underestimate the significance of what has just happened. The game has changed. In an unprecedented move that has sent shockwaves through the global financial markets, Switzerland has effectively frozen a significant portion of the world's physical silver supply. This is not a drill, not a test, and certainly not a rumor. As of 2 a.m. this morning, a critical artery in the physical silver market has been severed, and the implications are absolutely massive. What you're about to hear is a developing story, one that could fundamentally reshape the precious metals landscape and everything you thought you knew about supply, demand, and the true value of physical assets. And we have just received word, and the details are still coming in, but this is a moment that will be remembered. This changes everything. This morning, while most of the world was asleep, a directive was issued by Swiss authorities that has put an immediate and indefinite halt on the movement of a massive stockpile of physical silver. Sources close to the situation have confirmed that several of the largest private vaults in Switzerland, which are responsible for storing a substantial percentage of the world's investment-grade silver bars, are now under a complete lockdown. We're talking about vaults in strategic locations like Zurich and Geneva, hubs that are central to the global flow of precious metals. This isn't a minor disruption. It's a complete logistical and supply chain paralysis originating from the very heart of the global wealth management system. The official reasoning is still murky, with initial reports vaguely citing regulatory reviews and security protocols. But the timing and the scale of this action suggest something far more significant is at play. The immediate effect is a catastrophic cut to the physical supply available on the open market. Switzerland is not just a place where wealthy individuals store their assets. It's a critical transit and settlement hub for the entire precious metals ecosystem. Major refineries, bullion banks, and institutional investors rely on the seamless flow of metal in and out of these Swiss vaults to fulfill contracts and meet delivery obligations. With the supply line now frozen, we are looking at a potential cascade of defaults and a force majeure scenario on a scale we haven't witnessed in modern history. The paper market, the COMEX, can play its games with derivatives and futures contracts, but it cannot conjure physical silver out of thin air. This action in Switzerland exposes the fragile underbelly of the entire system, proving that at the end of the day, if you can't hold it, you might not actually own it. This freeze is happening at the worst possible time for the market. Industrial demand for silver is already at an all-time high, driven by the green energy transition and the insatiable need for silver in solar panels, electric vehicles, and countless electronic components. Simultaneously, investment demand has been surging as individuals and institutions seek a safe haven from rampant inflation and geopolitical instability. We were already in a situation of a severe supply deficit, where miners couldn't pull silver out of the ground fast enough to meet demand. Now, a massive portion of the above-ground deliverable stock has been taken off the table overnight. This isn't just throwing gasoline on a fire, it's like dropping a thermobaric bomb on an ammunition depot. The squeeze that many have been predicting for years is no longer a theoretical possibility. It's happening right now, triggered by a deliberate action from one of the world's most trusted financial centers. What does this mean for you? It means the game has fundamentally changed. The price you see on your screen for a paper ounce of silver is becoming increasingly irrelevant and detached from reality. The real price is what it will cost to get your hands on a physical ounce, and that price is about to go vertical. The premiums on coins and bars are set to explode as dealers scramble to find any available inventory. This Swiss freeze is a blaring siren, a final warning that the era of easily accessible, relatively cheap physical silver is over. The disconnect between the paper price and the physical reality is about to become a chasm. Those who have secured their physical holdings will be insulated from the chaos that is about to unfold. Those who have been waiting on the sidelines may find that the train has not just left the station, but the tracks have been pulled up behind it. This is a pivotal moment in financial history. The Swiss, long seen as the guardians of stability and sound money, have just made a move that introduces unprecedented instability into a critical market. It's a signal that the global financial system is under extreme stress, and authorities are willing to take drastic measures that were previously unthinkable. As this story continues to develop, we will be here to bring you the latest information and analysis. What happens in the next 24 to 48 hours will be absolutely crucial. The ripple effects of this Swiss silver freeze will be felt across every asset class and in every corner of the globe. Pay close attention, because we are witnessing the system fracture in real time. This changes everything.